All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers held ES above that 45 to 47 area that was discussed in yesterday's recap. So buyers remain in control, and that eventually led to a move back up to yesterday's high, 57, where we got a little bit of rotation, and we're just balancing a bit right now. Now the theme for today is going to be extra selective on the trade setups that you take, because we have to realize that the opportunity potential of each day is not the same, right? Some days offer much more reward and opportunities than others. And right now, we're running on below average volume heading into a long weekend. So the context doesn't really support a high volume, fast paced, high volatility session, right? So taking that into account, we have to adjust how aggressive or how conservative we're going to be on our execution, because if it's not really a day where we expect a lot of opportunity, then that means that we're not going to take as many trades, and even the trades we do take have to be trades where we have high conviction that the trade idea is going to work, and we're getting really good trade location where the profit potential is at least two times our risk, so at least two times our stop size. But ideally, you're getting 3 to 1 reward to risk in order to get involved. And then once you enter the trade, keep in mind that if the low volume continues, then it's probably going to be a slower pace as well, and it's going to take some time for the market to hit your target. So be mentally prepared to sit in that trade, potentially for a few hours before it hits your target. Depending on exactly where you get in, it could take some time. So, just be prepared for that mentally. That if you're jumping in, if you're getting involved, then it could take a little bit longer today for the market to reach its objective and to fill you on your target. And at the same time, because we're running on low volume and expecting more of a, not really too much balance, but more of just a slower pace in the market, that you don't want to enter at a price where it's going to grind a lot and chop a lot, and it's going to be difficult to hold a trade. So, keeping all that in mind, the theme for today is going to be extra selective on the trade setups we do take, and if we don't have conviction in the idea, or if we're not getting good location, then even though we might think that the market can put in a reaction here, if there's no conviction and we don't think the reaction is going to be big enough to justify the risks, then we're simply going to skip the trade. So with that in mind, right now the immediate resistance zone above is 57 to 59.5. This is basically top of the range from yesterday, top of the short-term balance that we're developing over here. A breakout above 57 brings the 62 and 64.5 to 67.5 into play as upside objectives, and then sellers can still be active at those zones, because looking at the other markets, NQ and TF are still relatively weak to the S&P. They haven't retraced nearly as much as the S&P, so the idea is that if ES heads higher, then those markets can also pop, but because they're still weak, they'll probably still attract sellers on any continued movement higher. And although they can put in a catch-up move, eventually when they hit their own resistance areas, that can result in a slowdown, or at least in a pause in the upside in the S&P. So it can limit the upside in the S&P. So on the upside, 64.5 to 67.5 is probably going to be the cap on the day time frame in the event of an upside move. On the downside, buyers can maintain control above the 46 quarter prior VPOG, above the 47.5 to 49.5 pre-market support. So, in the event of a pullback to that area, if everything else is still shaping up to be relatively bullish, that could present a long setup. It is going to be a second test of that zone. So, we'll have to be a little bit cautious, make sure that there's still enough strength in the market to justify a move back up towards, the 57 and 62. In the event that we break lower, below 46, that would bring 41, the open gap at 39.5, and the 36.5 to 38.5 support into play. And we do expect responsive buyers to be active at basically the bottom of yesterday's range. So at 41, 39.5, that area can attract buyers as well, and then we can go back up towards the 48, 49 area. So right now, that's really the expectation on the market. Is the current bias is bullish heading into the day. The main idea is that if the buyers can hold above 49.5, there's a higher probability of breaking 57 and going to 62, potentially 64.5. Depending on how much volume and range we can get on the day time frame. So right now the bias is bullish, but at 9 a.m. Central we do have the Philly Fed survey. That's the main catalyst on the day time frame, and that econ release can shift the momentum. So if we get a negative reaction to that econ release, then look if the momentum is still on the upside, or if is there a momentum shift. And on the short side, up here at 57s, it only really makes sense to get involved if there is a shift in momentum. And if if there isn't, then we can just grind and just balance and continue going higher. So the only time you want to really get more aggressive on the short side is if there's a reversal in play. And for the market to reverse, the momentum would have to be shifting and showing us a lot of weakness as well. So the NYC tick would have to show us much lower tick readings in relation to the readings we see above zero, right? So when tick pushes lower, we should be seeing minus 800 to 1,000. When it pushes higher, we should be seeing plus 400, 500. That'll show us that the skew of the tick is to the downside, and then we can be a little more active on short setups, but still keeping that selective theme in mind, right? And if you miss the trade, then I think chasing in this type of environment can be very risky because the probability of chop is higher. So if you're chasing the trade and getting in at bad location, that can quite easily result in a loss, or just frustrate you because the market just continues to chop within a range and doesn't really give you a profit or a loss, and then eventually it could hit either or. And then there's no conviction in the setup. So right now, that's the environment we're in. Very balanced here at the highs. Let's keep all those notes in mind about the type of market we're in right now and the type of day that we're expecting. And then, if things change in real time, like, if the volume does pick up and the pace and volatility does pick up, then we can adapt. But by default, we have to go with, what's generally expected on the day time frame. And, given the long weekend heading into a holiday, lower volume, no big catalyst, stuck in a balance, keeping that context in mind, we just have to be very selective and limit our trading on the day time frame today, because again, the opportunity potential is not the same every day. You have to press it when the opportunity is there, and then pull back when the reward potential is not quite as high. So right now, those are the main thoughts heading into the day. Let's see how well the buyers hold the market this morning, and we'll take it from there.